This is a preview video. Thanks for joining us at XM.com. At her latest press conference back in July, European Central Bank President Christine Lagarde refrained from committing to another rate hike. But could the preliminary PMIs out this week offer any clarity on the matter? I'm Cristina Marujos. Joining me today is investment analyst Cristina Bartenidu. Cristina, the flash business PMIs are out on Wednesday. They are expected to show growth in the Eurozone is losing steam. Now, how could this possibly change market expectations around the European Central Bank's next move in September?
Hi, Christina, and thank you for having me today. Well, let me first explain what happened during the ECB's press conference back in July before we start to discuss this week's PMI data. Overall, I think the ECB president and generally all central bankers are facing a challenging economic situation because inflation has slowed down significantly, but it's not at the 2% target, and it's not expected to ease towards that goal before 2025 in the Eurozone. On the other hand, the Eurozone economy is between recession and stagnation, and specifically some member states such as Poland and the Netherlands have already entered a soft technical recession even before consumers start to face variable interest rates. A large part of consumers are still paying their fixed interest rates. Of course, the labor market is still resilient, but signs of contraction are already evident in the manufacturing sector, which is still short of skilled workers. The war in Ukraine is apparently limiting financial and product resources such as gas, which is important for Germany's factories, and China's disappointing performance is further dampening hopes for a proper recovery. So, although the central bank remains focused on its price stability mission, recession fears and the weak data releases out of the Eurozone suggest that the tightening phase is probably approaching an end. But of course, we need more evidence for that. And perhaps this is what President Lagarde wanted to say during her July's press conference. She didn't want to commit to a rate hike or a pause because she still needs more data before she decides her next policy decision. And this week's that turns attention to this week's flash PMI figures. Those could be more evidence about whether the ECB will deliver another rate hike or pause monetary tightening in September. We expect weaker services and manufacturing PMI indices, and if there is a bigger negative surprise than data, that could actually reduce the odds for a 25 basis point rate hike to a flip coin. Investors are currently providing around 64% probability for a 25 basis point rate hike. So if the data disappoint, that could actually question whether there is need for another rate increase. But given that inflation is still above 5% in the Eurozone, I think the data may not prevent a rate hike in September, but the data could actually signal the end of the tightening phase as soon as in September.
I see. Now let's turn to the euro. How could we see the single currency perform this week?
The euro has been in a downtrend since mid-July. The ECB's press conference couldn't support the currency, and the relatively resilient US economy has been waving further on euro-dollar, so another downbeat PMI report could be bad news for the euro, likely sending euro-dollar down to 1.08. On the other hand, if the data comes stronger than expected, increasing the odds for a rate increase, the euro could rise. But we shouldn't forget that Powell will deliver, he's scheduled to deliver his Jackson Hole speech this Friday, so any signals about what the Fed will do next could be important for the euro-dollar as well. If Powell sounds more dovish than expected, that could actually boost euro-dollar. So I would like to see a decisive rally above 1.10 before I become confident that any increase in the market is out of the current bearish trend.
Cristina, thanks so much. This was a preview video. Thanks for watching at XM.com.